The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and the market is moving a bit crazy today. And if you have any questions, go ahead and feel free to give me a call at 877-927-6648. Again, that's 877-927-6648. And we got a lot going on, a lot moving around, and we're going to go through quite a few things for you on the show today and just look at all the stuff. We had a lot of announcements. We talked about those yesterday, and they did come on out. So before we start with that, let's go ahead and do a current market wrap on where everything is at in the markets right now. We have the S&P up 3.75 points right now. We got the NASDAQ down literally just a quarter of a point. We have the Russell up down now 1 point on the day. And it's been flying down, and then came back up a little bit on that. And then looking at the Dow, it's up 29 points, and it's really trying to push, breaking that gap fill. The other three have already filled their gaps for the day. And over on copper, it is basically flat on the day. Looking at silver, silver is down about 1/3% right now, and gold is down $7.20. And over on our ags, we got the corn market is down just 3 points on the day, and soybeans is up 13 points on the day, almost a full percent move on soybeans. Looking over at oil, oil is down a pretty large amount, as you can see right here with the oil inventory report coming in a lot higher than expected, a lot more storage. Again, we talked about that over the last couple of weeks when we were talking about oil, how the inventories are rising, production is rising, and so it would not be a surprise to see oil take some hits and move further on down based on the reports that could have come out. We did expect that to be a higher inventory report. Looking at natural gas, got the same thing going on. It's actually down almost 2% on the day at this moment. Natural gas flying down. And if we roll it over and check out our currency pairs, we got the euro dollar. It's sort of mixed on the dollar. Now we got the euro dollar down 27 ticks. We got the pound dollar up 75 ticks. We got the Aussie dollar up 83 ticks over yesterday's close. The U.S. yen is down 2. The U.S. franc is up 10. And the U.S. Canadian is up 26 pips on the day right now. So that gives us the current update on everything that's going on in the markets and where they're standing at. So that way, if you're listening to us over at TFNN.mobi and you just want a quick update on the markets, yeah, I got it. And now looking at what's been going on in the markets. So last night we had some reports come out, and one of the biggest reports came out was a CPI for Aussie dollar, and we can take a check and look at that one right now. And you can see how the Aussie dollar just basically just been moving high. And you can obviously see when that report came out right there. And flew on up, came down, moved, and then just gapped again right there. And so just a massive, massive move. The report came out at 8:30, and but just some pretty big moves overall in the market that we saw in Aussie dollar, and it's rose pretty steadily. And that's given it a lot of strength on the day. So that's what's been going on in Aussie dollar, and it is pushing some levels, and we talk about the deviation levels, of course, right here on the Diagnostic Trading Hour. We like to look at them and talk about them and to see where everything is currently sitting. And so to look over here at the Aussie dollar, we can see that it moved on up to 1.0343, which is pretty helpful. Actually, it looks like it got a little bit higher than that, 1.0350. And so 1.03051 was, let's see, right there, 1.03, actually, 1.0302 was going to be a 0.7. So at 1.0302, you would have been tightening your stop. So that would have been way down here. And if you joined in later in the game, then you could have wrote it up to 1.0319. And again, that's, hit that mark pretty early right there. So you can see this, big pop right there earlier in the morning. And kept on rising up to that level right there. The next level is 1.0376. Haven't quite made it up to that level. We have got a 1.5 deviation move, though. And so we have moved pretty far. And again, what do the deviations do for you? Well, they help you pick what strikes to look at for your binaries, to pick out what spreads to choose, and to pick out where to take profits, whether you're trading Nadex spreads, Nadex binaries, futures, or Forex. And so I'll go ahead and post those up as we go through and look through a few of the markets and talk about the fundamentals. and put those on the screen for everybody on Tigers TV and over in the den. So those are up there right now. Go ahead and check them out. And so we had that CPI number come in on the Aussie dollar greater than expected. They thought it was going to come in at 0.9. It came in at 1.4. And so the CPI, again, that's the change in the price of goods and services purchased by consumers. So, basically it's going in and like how much are people paying to obtain things. And so that increased price shows increased demand, and that's a good thing for the currency. That's why the Aussie dollar rose so well. And then we had, it was just a flash manufacturing PMI announcement across the board. We had China come on out, and I'll go ahead and if you go over to Market is a great website, MARKIT, and that Market Economics, that's actually who does the PMI reports, that's the press releases. And you can see all those right there. Again, that's marketeconomics.com, MARKIT economics.com. And under press releases, they have all the PMI data and the reports that came out on those. And they really didn't come out in line with the expectations that they had. China's did rise up a little bit. However, they did have to revise some other numbers, and that had a negative impact on it. But most of the numbers, weren't too big of really a negative revision. So China wasn't the worst of the group. But when you roll on over and you look at the continued PMIs that came out, we had the French PMI come out. It came out worse than expected. And again, what is PMI? Purchasing Managers Index. So they survey a bunch of purchasing managers, and based on their, answers to key questions, etc., then they have an index and they track that. And so the index came in lower than expected. And though it was better than the last report, it's still pretty low. And they've had to make, several revisions on it. But the French manufacturing didn't come in that well. That came in at 3 o'clock. At 3:30, we had the German one come in, which is obviously more important than the French one, just the Germany being one of the, obviously the biggest real economy out in Germany, in EU. And it came in worse than expected at 45.7. They expected 48.1. And then went on over, and the German Info Business Climate Change came out, and that came out worse than expected. So, and what that is, the info climate change, that's a level, it's an index where, again, they survey manufacturers, but they also survey builders, wholesalers, and retailers. And they ask them about their current business conditions and their expectations over the next 6 months. And the expectations have dropped and have been consistently dropping. And so that's a negative outlook basically over the next 6 months. And they've been seeing that trend down since May. And it went ahead and declined basically June, July, August, September, and now it's even lower. That came in at 100 from a level of 100.5. 101.5 is what the expectation was. So it's been dropping steadily and continued to drop. That came out at 4 a.m. Central Time. And then we roll on over and we check out some of the other things that went on. The German bond auction, they actually had to pay a little bit more for their bonds this time around. Not much, though. Not enough to cause any kind of big concern. And over in Europe, you had the EC, or the Flash Manufacturing PMI for Europe. That came in worse than expected at 51.3, and of course weighted heavily, of course, by Germany. And if you take it all into account, you also have the U.S. Manufacturing PMI that came in negative. That came out at 9 a.m. And the Flash Manufacturing PMI for the United States was a big issue because obviously everybody's looking for that to be a positive number. It was not. That weighed pretty heavily on the markets. Draghi came out and did his speech, didn't really seem to save much of anything in his conversation. We can look at sort of what happened on the chart if we pull up the euro dollar and just sort of see, what happened as Draghi decided to talk. And who is Draghi? Draghi is the ECB, the European Central Bank president. So we can see these reports were coming out overnight. Right there, we got the first, big report coming out. It drops, market drops on down on that, just keeps going down. And then a little bit of a recovery there in the morning, and then he comes out and decides to talk right here. Mark got a little bit oscillated when he had his first conference, but that was one thing. But then he came out and made another conference. He had a conference at 7:45 a.m. That was sort of closed doors, so the market rallied a little bit on the closed door. But when he came out and spoke, market decided to go ahead and continue its decline. Now the big thing that definitely affected the market's course was we also had the new home sales report come out. That came out at 10 o'clock Eastern Time. Came in a little bit better than expected, but it wasn't good enough to really excite the markets. So, sort of a shock if you're trading that trade right there. Again, the market came in. It came in as one of the best numbers we've had in a long time. But they actually had to revise down previous numbers. So even though the number was good, they had to move numbers, down. And so that obviously is never a good thing when they're revising, numbers down. Like the last month, they had to revise down from 372 to 368. And Then going ahead and looking on over, so that's the PMI. That, by the way, that came out at 10 o'clock, and or 10 o'clock Central Time there. And so if we look at that, that was obviously, a negative impact. We can pull it up, 10 o'clock right there, and the market has started to continue to decline. Dollar got stronger. We can look over at the S&P and see exactly what it did on the report. And we can see right here when it came on out, that's when the market, it's like a little excitement at first, but then really not excited enough, and pulled on down, and that's when it decided to fill in its gap for the day, for the close of the previous day. It was a high probability gap fill day. And then we had Canada come out. Canada has been moving like crazy along with oil, and because they're obviously linked together. But Bank of Canada had their rate statement come out, and they, nothing just real stellar, nothing wow. But they came out and they had their press conference about their rate statement. Sorry about that. So they had their press conference about that, and they had their monetary policy report come out. And the monetary policy report that came out at 10:30 and Central Time there. And so you can see when that came out, it was very negative for the Canadian dollar, and very positive for the dollar itself. And you can see that massive shoot up right there on that report. And then, of course, you also had oil inventories come in, and oil inventories came in, a lot higher than expected, therefore less demand, higher supply, etc. And so, of course, that also strengthened the dollar and weakened the Canadian dollar. And rolling on over, we got the Bank of Canada press conference. That came out at 11:15. And you hadn't really seen any big news come out from that press conference that did roll out. And usually that's a bigger mover, but not much. And then what do we have going on left for today? Well, if we look over here at today and what is left that's coming up, then we can see, let's see here, I'll pull it up for you right now. And we'll line everything up on the charts. And let me pull up the calendar there. We got FOMC statement is left for the day. So that's obviously going to be a big thing that's coming out at 1:15. And with all these reports that came out earlier this morning and pushing everything there, the rate statements, everything, moving everything around, it'll be interesting to see how the FOMC statement comes out. And the with the funds rate, of course, we don't expect any change, but the statement will be, they're going to, say slightly like, how long are they going to leave interest rates where they're at, or what are they going to say? And everything's sort of hanging on it right now because they got this big QE program. Obviously, it's not supporting the markets. And so what is going to be their next statement, and, what things are they going to say about their economic outlook and about how long they're going to keep the interest rate low, and also, what comments are going to come out about QE. Are they going to change QE? Are they going to raise it? What are they going to do? So that's just going to be, a big topic right there, and that's coming out again here in just an hour. So be ready for that. That should be a market mover all in of itself. And then if any of you are New Zealand dollar traders, the New Zealand dollar is going to be releasing their statement and their official rate, and they're at 2.5%. So there could easily be a change in their interest rate. They have a lot of room right there compared to everybody else. And hold on right there. We'll be right back after this break. We'll start talking about some deviations where everything's sitting and setting up for the day.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour here with Darrell Martin. If you have any questions, feel free to give me a call. You can reach me right here at 877-927-6648. Also, if you're outside the United States, you can give us a call at 727-445-1044. And looking at everything right now, we're going to go ahead and do a wrap on the deviation levels and see, what do we expect as far as market movement and what expectations have already been met. And we had these posted a little bit earlier, so now I'm just going to run through each one of the markets. And this is going to be pretty important for when you're looking at this upcoming Fed funds announcement that's coming out. So looking over at the S&P, looks like we have levels right now. We got the market almost flat from yesterday's close, and we have an expectation on a half deviation up to 1414, and a full deviation would be all the way back up to 1422, and then a move on down to 1398 would be the expectation on a move down for a half a deviation all the way down to basically 1390 on a move down. So that's what gives you some profit target levels right there on the S&P. And if we go over and look at some of the other major indices right now, we got the Russell, which is basically also flat on the day after a little bit of a move down there. And we were expecting it to move down to about 809.5, and we can see that it basically it pretty much on the money. So went on down, actually 809.3. So it went on down to 809.1. And, so that was a great move right there on the Russell. It moved down. That's where you tighten stops if you are short. If you would have tightened stops there, you would have been happy with that move. And but that, go ahead and keep note of that if you're deciding to trade the Russell. Move again down to 809.3, and then further on down to 805.2. And then if it decides to pop to the upside after this announcement, we got to move up to 817.5, and then move on up to 821.5 if the market decides to rally on whatever comes out. Looking on over at the NASDAQ, and NASDAQ showed some pretty strong weakness, I guess. And anyways, but moved on down to 2648, and we had an expectation down to 2642, so it didn't even quite move a half deviation yet, though you can definitely say it's been volatile. It opened up, it filled that gap, and so pretty low right there, and we're expecting to move again down to 2642 or further on down to 2625, or if it decides to move up, we're expecting to move up to 2675, and then further on up to 2692 for the day on the NASDAQ. And then looking on over at the Dow. On the Dow, we got it going on. After some big moves on the Dow, we have a very flat day. Went on up, came on down, finally did decide to go ahead and get really close. I mean, you're talking 2 ticks away from filling that gap. I mean, it's really, really close. So we'll see what happens on that. But on the Dow, we do expect to move on down. If it decides to move on down, a half deviation move down from the close would be a move down to 12,967. And then that's where you'd be tightening stops, and you continue to tighten the stops at the 0.7 levels, and then a further on move down to basically 12,895. So that would be our targets if the market were to react negatively to whatever comes out of the announcement. If the market moves on up, we'd expect to move on up to 13,109, and then if it decides to really keep rallying, 13,180 would be about as far as we expect the market to move on the day on a 1 deviation. It may move further. If that happens, all we're doing is we're tightening stops, but not necessarily adding to trades after those 1 deviation moves. And then copper, as we talked about earlier, pretty flat on the day, and the copper pits are already closed down, so not a whole lot left right there. Silver, markets will be closing out here pretty soon. They'll be closing out at 30 minutes or about 15 minutes after the announcement, and it moved on down to 3153.5, so 31.535, and really just a very small move. Not a whole lot going on in silver for the day. So usually you see a lot bigger move than that. And but we could definitely see some moves. If we do see moves on silver, the move would be down to 31.41, and then further on down to 31.13 if it decides to move on back down. If it does move up, it could go easily up to 32, and then on up to 32.24. So what about gold? So gold obviously could be an easily high-impacted instrument during the news announcements. And again, you can trade these on Nadex. We'll talk about that and pull up some Nadex stuff here in a minute. But over on gold, right now it's sitting, it looks like it's sitting at 1702.4. It moved on down to 1698.9. And if I'm looking at the gold futures, we do have an expectation of a move down to 1701. Obviously, it did hit that, and just by a few more points. And then a further on move down to 1698. And almost to 1698 at 0.7. That's where you better start tightening stops at 0.7. And then the expectation is a move on down to 1693.5 on gold for the day. If gold, for whatever reason, did decide to rally and the dollar got a lot weaker or whatever, however that decides to work, then you could look at a move on up to expectations of 1716. And then if it really decides to rally, move up to 1723.5 for the day. And that gives us a wrap on our ags. We'll come back, we'll check out our currencies and our ags, and then we'll look at some different ways to trade this on Nadex. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And we're going over now looking at the deviation levels. And we just went through some of the markets there. Now we're going to cover the agriculturals and see what they're doing. They're not doing a whole lot today. You can see corn pretty flat on the day. It did have a move on up to, looks like around 1763, 1764 there. And looking at corn, we did have an expectation for it to move up to, let's see, 1763.68 would have been a 0.7 deviation level. And it looks like we just literally came right to that level and then turned on back down. And so, not expecting a whole lot more out of corn. It's going to be closing down here on the pit market pretty soon anyway. And then looking over at the soybeans, we got markets going on right there, and that's just it's just steadily climbed up, but really been flat for most of the trading day, and just nothing to really write home about. The move up from last night, which gave it most of its boost, already hit the deviation level, which was projected to be at 1574.6, so it would have been 0.75 rounded on up there, and it literally hit that to the tick on one deviation move on soybeans. So at that point, that would have been where you've been looking to take profits, tighten stops, and potentially plan for any reversals that you might want to do. Looking on over now and checking out our currencies. We got the Aussie dollar. So on the Aussie dollar, as we already know, it moved quite a bit with all the news that came out last night and the positive news for the Aussie last night. And the move on up was to 1.0341. And so that move did put us past a 1 deviation mark. And if we go in and we add in, and this is one of the things I do, is I'll go in and for a 1.5 deviation, I'll go in and just look at, once we break that level, where do I expect it to go? Well, we had to move up to 1.0290, and then, we had to move a little bit further up. So if you actually go in and you do the full deviation, 1.0319, and then just add in what a half deviation move is. Well, a half deviation move for today on Aussie dollar is 29 pips. So 0.0029. And that puts us at 1.0609. Let me do that one more time there. 1.0319. So there we go. 1.0319 plus 0.0029. All right, 1.0348. And so at 348, that would have been, we're literally right to the half deviation mark by just a couple ticks, 1.5 deviations. And it hit that level, pulled on back down here to 1.032, and that basically would have been a move right on back down to a 1 deviation move. And then it bounced right back off that, and it's going up to 1.5 deviations. So now it's just bouncing in 1.5 deviation zone right there. So a little swing trade going on. And then looking on over at our euro dollar and what we can see from that, because obviously we will expect that to move, and based on whatever comes out here in about 30-45 minutes. And so on that right there, we have an expectation of a move. Let's see, right now we moved all the way down to 1.9. Let's see, the low on the day was a move all the way down to 1.9219, and we had an expectation of a move down to first 2943. And then first to 1.2929, which is where you tighten your stop at that 0.7, and then on down to 1.2907. It was actually a full deviation, so we didn't hit the full deviation move yet. And but that would be the target right now is 1.2907 on a move down, and on a move up, what do we expect? Well, if the euro dollar was to say it decides to climb after this announcement comes out, we got 1.0315 would be our first mark, so right up here. And if it really decides to move into the full deviation on back up from almost a full deviation move down, then we'd expect it to move on up to, and so this is really helpful for you setting those profit targets, 1.3051. And that's really as far as we could expect, or we should expect, the market to move today on the upside. And then looking on over for the pound dollar, and it showed a lot of strength today. And so checking out our pound dollar, we can see a move on up here to 1.6047. And on that move right there, 1.6047, we can see that the pound dollar did have a nice, strong up move. And on that move, that was a move up to, literally it broke the 1 deviation mark already for the day. And that's basically a 1.5 deviation move also on the pound dollar. So we're seeing that pretty consistently on several of the currency pairs. And so now let's check out some of the ways that you can use this, okay? So what you want to do is, if you haven't done it already, hop on over to TFNN.com. So let's go right there, literally to the home page. And as soon as you get to the home page, you'll go right on there. Let's see here, I'm pulling it up. And then click on the Nadex banner, okay? When you click on that Nadex banner, then you're going to want to get an account if you don't have one already. So under our products, there's a link to a demo account. That takes about literally 15 seconds for you to sign up for. You can fill in your username, first name, last name, phone number, and email address, and hit apply for demo, and they'll give you $25,000 of funding money. You can go in and you can start playing with it and place some trades, binary spreads, things like that. But also, for a live account, just click Create Account and click Start. It only takes about $100 to fund an account. Of course, I recommend you put in a couple grand into the account, but you only have to put $100 in to fund an account and get all the privileges of membership. And again, that's just a fund an account. That's not a fee. And so when you do that, it takes about 5 minutes from start to funded, and you can literally start trading right away. So it's really that simple. I mean, it only takes a few minutes. And the demo account is great because you can go in on trades like this, like before certain announcements, and test them out and see how they work and figure out what you do right, what you do wrong, what could you have done better. And of course, you can always, email me questions at dmartin@tfnn.com. I'll be happy to help you out, or give me a call live on the radio show. If you email them to me and you're listening to the archives, I will be happy to answer them on a different trading day for you. So let me go ahead and log in now. I'll log into my account over here, and we'll look at some possible trade setups just based on what's coming out in the market. So once we got that up and we've logged into our account, then the next thing we're going to do is going to look at, like I said, the deviation levels. And I had those pushed up there earlier so you can check those out. But on the deviation levels, we go over here, open it up, and then, we pick a market that we want to trade. So let's say that we want to look at we'll just make it simple. We'll look at the S&P. All right. So if we go to the S&P 500, then over on Nadex, then that would simply be your US 500 contracts. So you could choose bull spreads or binaries. So we could say, okay, we want to look at the bull spreads and then US 500. And then now you have to choose from all of these different markets which ones that you want to trade. And you got to find, basically the best trade for you. And there's different ways to do that. One of the ways that we'll be rolling out real soon here at TFNN is what I call my box spread scanner. And I use it to scan all the spreads over on the Nadex platform. And I'll show you that real quick and let you see what it looks like and how it helps you out. So, because when you're looking at all these, you need to find one that's going to expire, of course, after the news announcement comes out, right? And you're going to want to find one that has the low risk and ideally the highest profitability. And so we hop on over here, we check this out. And so I'll say, you know what, I don't want to risk more than $100. And we got that. And then I can say, you know what, I also would like to be able to make at least $2 for every dollar at risk. And so now that narrows down all my spreads. And I can say, well, the announcement's coming out here in 45 minutes, so I need at least 45 minutes, until expiration. That'll knock out a couple more. And now it shows me basically you can see there's 3 sets of spreads on the buy and sell side. So looking at these, I can see I have, a variety of spreads. And I can see real quick a few things that just point out to me. One, they're all about a 3-point move to break even, so they're expecting at least a 3-point move right now. And so that really isn't going to be a deciding factor for me because it's the same across the board. What is huge is I can see that I have a $24 or $25 risk right here, and I have a $27 risk on both of these. And they both have 152 minutes till expiration. So if I, let's say, highlight every one of them, they go, okay, well, if these have the same risk, $2 to me is the same risk, and they have less time to expiration, and they basically have to move the same distance, then I'm going to take them off my options, okay? And so that'll actually remove them even from the risk-reward analysis chart for you. And then you can see real quick, you'll notice how these can make more money, these red ones right here. So we go over here and we go, well, what is that? We'll see $270, $26 risk, expires in 152 minutes. $370, $26 risk, expires in 152 minutes. So wait a minute, same expiration minutes left, and same amount of risk, but I can make more money. So why in the world would I buy, this one right here with $270 potential profit when I can buy this one right here with $370 potential profit, have the exact same amount of time, and not take on another dime in risk? So take that one off my list. I have the exact same thing going on here. So the exact same risk with higher profitability and the same time till expiration. So I take that one off. And now I know, okay, now I've actually found the best possibility for the trades for me, and I can go in and I can choose these trades. And I go up here and I can choose that I want to trade over on the demo side. And then I click buy. And that'll actually open the ticket for me over in Nadex. And so you can see right there, it opened it on up. And now I can place that order. And I can go in and I can place, say, if I wanted to, say 5 contracts. And I'll just set that ticket to the side for a second. And then I'll go over here and I was like, okay, well, this one's sell. So, I'll sell that. Well, by doing that, you can see right here, I'm doing a straddle. Okay, if the market goes up or down, I can make money. I just needed to move a few dollars, so a few points up or down, to be break even on one side. And, if it moves 6 points or more, I'm making money. And so I got to look at just what is my expectation of movement. And it's very helpful to know what your expectation of movement is, because without an expectation of movement, you're not, basically, you expect to get what you inspect. So, we have a deviation move of at least 8 points and possibly 16 points on the S&P. And so that lets me know, okay, well, that's a decent trade, and I can take advantage of that and put that trade in. And so I can go in, and I can place just one. That's $31 on the buy side. I can place that one in. That's, I can put just one of them in there. And again, that's just $27. So I only have $60 risk on this trade, and I'm now straddled and ready for the upcoming announcement. The market moves a lot, then I have the potential to make, a couple $100 depending on how far it moves. And if it doesn't move that much, then I'm only risking, $60 on the trade. So a very small risk and, a great potential profitability on that trade that I can take advantage of. And so you'll see right there. Also, you can see in the working orders tab, like one of them, the market moves as I was talking there, and I didn't update my ticket. So what I can do is I can go in here, and I can go to working orders, okay? And this is a really helpful thing for you to know how to edit a working order. Oh, got filled. And you could actually go in and you could edit it, but it went ahead and did it for me. And since I know what my risk is, I can also, if I want to, and it's, it's important to do this, to have a profit goal, is I can open up with profit goals on the trades. So I could say when the market gets to, we could put, say, the 0.7 deviation levels. So if it gets to 417.75, then I want to sell. And so I could literally put this in at 14.17. I'll put it at 14.17. That'll close that trade out for me at 14.17. And then I can go over here and go, what about the 0.7 deviation level down? That'd be to move down to 1394.75. So I can go in here and I can do, okay, I want to close at 1394.75. And then hit place order. And now, let's see here. I got to retype that there. I forgot. One of the nice things, I love this actually about Nadex, is on the US 500 spreads. One of the reasons it's my favorite spread is it ticks tighter than the actual underlying market. The underlying market ticks in quarters, and the spread is generally just ticks in dimes, 0.1, 0.2, 0.3, 0.4. So I'll round that up to 0.8 and put that in and hit place order. And now, not only do I have my trade on, not only do I have defined risk, the market can move up and down all at once and go as crazy as it wants to. But if the market gets to those levels for me, then it'll close out the spread automatically. And so basically it's sit and forget. Okay, put it on. Don't worry about risk. Don't worry about whipsaws. And at the same time, have the ability to take profit orders put in, so if the market does move to those levels, then I'm able to make some money. So that's a pretty simple way to do it. And you can go over and, that's one example. You can also check out, say, the euro dollar, and you can trade that. So if we pull that up, we can look at the euro dollar and what exists right now on it, and you could check out some different trades. They all expire about the same time. Different ones have different profit potentials, and so you may go on and decide to do, I guess, this trade and this trade right here, and you'd have a good risk reward ratio. You're only risking about $30, and then you got to look at what your take profit levels are. So on the exact same thing on this trade, let's go ahead and we'll put a buy-in on the euro dollar. Okay. And we'll also put a sell order in on the euro dollar. So now that we got those two trades in, then we find out pretty quick that we just hit place order on that one and place order on that one. Instantly we're filled right away. You can see that. And we can also put in our take profit orders. Okay. So what is our take profit orders on the euro dollar? Well, first we'll go ahead and go to the downside. Where we like to buy it back at? Well, on euro dollar, it'd be good to buy it back, like I said, maybe at a point, 7 deviation level, and so that'd be 1.02, 92. We may actually go a little bit lower than that since the news is coming out to 1.2907. I mean, we had a really, really small risk on this trade, so we're gonna go ahead and put that one in at 1.2907 as our take profit goal on the euro dollar, and so that puts that. That's just if it moves down. Now, one of the great things is when it moves down and then back up, because then you can actually have take profit orders on both sides. And if you go down, you can get filled, it can move back up, and you can get filled on the upside. And that's not a surprising thing to see a lot of times when Fed funds comes out, because the market can really hop up and down. And then to move on up to about 1.03031 or 1.0351, let's go ahead and go for the 1.0303. Oh, there we go. So 1.3030. So take profit. So basically the one we're buying, if it gets up to that price, then we'll take profit off on that side and hit place order, and now we have that one done. Now the one other market that really probably my favorite one out of all of these to trade whenever this comes out is gold. So if gold's open whenever this comes out, then you can take advantage of it. And how do you know when a market's going to open, when it can expire? Well, it's pretty easy. Is you just click on here. The only issue is certain announcements will come out when a market is open or not. If you see nothing on the scanner, you know the market's not open. So how can you find out when a market is open? Well, it's really simple. Over on Nadex, just go to range of markets and click on commodities. And then what I'll do is I'll show you how to find the contract specs on any market for Nadex so you can know the hours and how they work as soon as we come back from this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this prospectus and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And one of the things I was going over is sometimes I get the question of when are certain markets open. And so if you go over to nadex.com, you can go into range of markets, and you'll see you have the indices, forex, and commodities here. So let's say you're trying to look at gold, and you're like, why isn't there anything in gold? Well, click over on commodities, and then right there you'll see contract specs. You'll see the same thing under forex, contract specs, and stock indices, contract specs. So if we focus on commodities and click on contract specs, you can now scroll down, and you'll see the metals. So gold, silver, and copper. And then you'll see the binary options and the bull spreads and what contracts are currently available and what time they close. So they close right here at 1:30 Eastern Time. All the times posted are Eastern Time. And then you can see that the ones for silver close at 1:25 and the ones for copper close at 1. And some people go, where do those numbers, where does that time come from? They're following the actual floor market. So if you go over to, so if you go to cmegroup.com, where gold is actually traded, and go to Globex here, it's just an easiest way to find it in my opinion there, and then go over to metals. And what you can see is, and you don't have to do this, but I'm just showing you, where they get the time from. You go to contract specs. So we're on the gold, the actual gold futures contracts. And you can see when they close down here, and they close at 130, the open outcry. And so when the open outcry closes down, that's when they close down over here on Nadex at 130 as well on the gold contracts. Okay, so that's where they're getting the times from. It's not just random. So they're actually picking that to make it follow the floor there at the CME. And but I do love gold. Anytime I can get a good dollar announcement trade coming out, Fed announcement coming out, if it's coming out before the gold market closes, I think it's an awesome thing to trade. You can go in there, euro dollar, big moves, things like that. You can definitely take advantage of it, and it's a lot of fun. And it's a safe way to trade gold. Gold can be a little bit nerve-wracking. It can move a lot, and it can move. I mean, you can have 100-point move days and 3-point move days, and it can be really choppy. Same thing with silver, copper. And with Nadex, you can go there and you can trade it. No matter what you do, your risk is defined, and you can't be stopped out of your trade. You have until expiration there to be right on the trade. And it definitely can transform your trading. Another thing you can do, let's just say you like trading gold futures, you want to trade gold futures, is you can go in and you can actually hedge with them. And so like on gold, you can go in and let's say you're buying gold, you could sell 10 gold spreads, and that would make every 0.1, basically every tick, equal $10, because every tick on Nadex equals $1, no matter what product it is, and every tick on a gold futures contract, GC, equals $10. So by selling 10 spreads and buying gold, or vice versa, selling gold and buying 10 spreads, you can actually hedge your contract off, and the only risk in the trade would actually be the difference between where you bought one and sold the other. So if you're looking at, say a gold chart, and we pulled that up, and let's say right now the gold market was, open there, but let's say you went in and this morning you sold gold at 1710, but let's say you then bought the spread at 1702, okay? Or 1712. Then you have like a 2-point risk. So you have a couple $100 risk on there. But gold could move up as far as that spread goes. So let's say that was a pretty wide spread. You could say literally it's a 50-point spread. Then that'd mean you'd have a $5,000 stop loss for a $200 risk. Gold could move against you. You'd be making money in Nadex while you're losing money on your gold future. So your net would actually only be down a max $200, but it comes on back down, and again, you're able to have no cap on how much you make and still hedge off your futures contract. So it's a pretty cool way to trade. And like I said, you can combine it with not only just do Nadex, but if you wanted to use it as a hedge, it's a great hedging tool, and it's really the only options out there that are designed for short-term trading. So your futures contract options, you're going to be paying for 5 days or a month or whatever, a premium in those contracts, whereas here you're paying for maybe an hour or two of premium. So you don't have to deal with all that premium issue that you have to deal with and all the gamma, theta, vega, delta, etc. Messing up with you, because when you're on that last day, delta maxes out really quick, theta's pretty much non-existent. There's just a little bit of implied volatility built in, and makes it very, very easy to trade. Anyways, I hope you all have a great day, a safe day. Have fun in the markets. Got some news announcements coming out in about 15 minutes, so keep an eye on the markets there, and I will see you tomorrow.